OpenAI believing it's going to be a lot more than just models. It's going to be a hyperscaler. They want to be the software company for enterprises of the future. They want to be the device company. They're going to be the search company. They want to be the social media platform. Like, they are believing that they are the super corp of the future. Watch Mr. Robot. They are evil corp. They want to be evil corp. So
I love that.
Founder and CEO of More Insights and Strategy, Patrick Moorhead.
6, 5.
CEO of the Futurum Group,
Daniel Newman.
6, 5.
do we know what we're talking about, Moorhead?
We absolutely know what we're talking about. All right, boom. There we go, Daniel. I got to admit, man, it's been a long March, 7 straight weeks on the road. Somehow my voice has decided to leave me here, but no, we usually don't say exactly when we're broadcasting, but it is Sunday morning, and hopefully all of you can see it on Monday. Jeff, Bestie, I've missed you. You know, even though I've traveled to some pretty cool places in the last 2 weeks, I have missed my bestie, my compadre, and research does show that if those men who do not have besties, they don't live longer, and they're pretty miserable. But I'm sure you read that and you were like, wait a second, Moorhead's like miserable most of the time, or let's say a little bit of the time. It could actually be worse.
It's interesting to figure out if that's possible. Am I what's keeping you from being even more miserable? I don't know. Yeah, that research was interesting, though. Basically, that we are just performative. We perform at home, and if we don't have someone, a friend that we can sort of take out our full selves on. So, hey, man, look, I'm here for you. I really didn't go anywhere. You were distant. Your distance was incredible last week. You're up to back in over just a few days, and I just was like zigzagging all over the place. But we got a lot done. I mean, it's nice when we can go all the same places. It's very convenient. But sometimes you got to divide, you got to conquer. Yeah, man. And listen, Sunday mornings. I mean, what else would we want to do besides pod for our amazing community? I mean, I can't think of anything I'd rather do on a Sunday than do this.
Yeah, I know. I hear you. I mean, I'd be like chilling in bed, getting ready for F1, getting ready to cry about my team that really sucked this weekend.
What is Max 16 today, and Yuki like 20?
Yuki's 25th. Hey, I did watch Rush. I watched 4 straight hours of F1 last night. Just watched the stress melt off. I watched Rush. Great movie if you haven't seen it. And the other one was the new F1 movie.
I did watch the F1 movie. I feel like I did watch Rush. Was that the one about Nikki?
Yeah. Rush was better. Rush was better than the F1. The latest
Rush
movie
felt a lot more authentic. It didn't have like F1 was cool, but like some of the scenes and the cars like flying like 700 meters in the air, and like the things like
catching on fire. Like, when's the last time somebody really got injured in Formula One? I mean,
it goes back to the Senna era. That was like when that all sort of the pivot was like after Ayrton Senna. Which, by the way, another show to watch. If you saw have you seen the miniseries on Netflix, the Senna one? If not, it was really good. It's like a 3-part, maybe about 3 hours, 3.5 hours long, all about sort of his. But today, and I think Lando's going to get a little closer to clinching the drivers' championship, as Oscar has recently forgotten how to drive. And then I don't know. It's weird how like 1 week or like 1 or 2 weeks, like in the US, like Max was so good. The car was so dominant. And then like, it does go to show though that, building a car for the season is not about any one race. It really is to build something that can be good on all these different tracks. So I think that's what McLaren has gotten right this year. They built a car that even when they're not great, they're top 10, they're getting points. These things come in waves, dude. But yeah, I mean, I look forward to day of football, day of racing, and of course, knocking this pod out before another busy week gets started.
I know. So let's dive in here. So we got a great show for you folks, and we are episode 284. OpenAI diversifies its cloud. Washington, D.C. tightens chip rules again. Microsoft's UAE deal clears commerce. Hey, going from China, I guess, to the UAE. Google turns on Ironwood TPUs and Axion as even head nodes. China's Kimi 2 rattles cost assumptions, or does it really? And if we have time, Apple's cheap MacBook chatter is alive and well again. And of course, partner motions out of Cisco and a lot of earnings, right? We had a brutal tech sell off, and we break down earnings from ARM, AMD, Qualcomm, Coherent, and Lattice. So
And we
let's
got a
dive.
flip today. Don't forget we got a flip. And
And the flip. I appreciate that. We're going to debate Elon Musk's pay package. So stay tuned. But let's dive into the decode. Am I calling my number? This is so out of order here. We must have.
yeah,
changed.
you know what happened was we like had the docket, and like the top topic that was you were gonna have me start with was something that I felt was kind of yawn worthy. So I'm like, let's not start that one. I want to see what it is. By the way, I did want to call you out before, you did mention that there was a market meltdown. Did you put money into the market? I think the only reason I could think the market performed so bad, we can talk about that later, but I was just thinking, was it possible that you timed it as perfectly as you ever did?
No, I timed it as perfectly as I usually do. I bought on Monday open and watched everything melt. So
It'll be back. It'll be back.
dive in here.
Oh,
Hey,
yeah.
OpenAI seemingly cut deals with everybody, right? Oracle, Azure, Google, CoreWeave, a bunch of different neo clouds, and I'm sure I've forgotten somebody on the hyperscaler side. But so the meme was, wow, AWS is so far behind. They don't know what they're doing. They are not doing anything. They're the old guard, and the new guard is everybody else. But here we go. Boom. OpenAI and AWS announced a 7-year, $38 billion deal for GPUs, and it starts now. And the entire build out should be complete in 2026. So, hundreds and thousands of NVIDIA GPUs using AWS's network and these super pods they put together that are seriously kick butt. So I just thought that, listen, this is a big deal. It just shows that I'm kind of buying into this whole notion, Daniel, that OpenAI, by having everybody on the hook for something, they're all going to be pushing for it, right? And anytime OpenAI needs help in this, somebody will come in and help them out. So I don't think there's any losers in here at all. There wasn't any discussion about Trainium, but after the gigantic deal with Anthropic, the million TPUs out there, and OpenAI's embrace of XPUs overall, I can't imagine that this wouldn't be in the cards, because the native OpenAI XPU is a few years off. So yeah, OpenAI is going completely multi-cloud and bringing the big checkbook to boot.
Yeah, this has always been a bit of a race to maximize capacity, making sure that it is in a position that it never is out in the cold. You sort of pin all these clouds and all these compute makers against each other, and yet come out with the advantage of being the chosen one. There was something this week that was kind of like a comment that someone made that maybe wasn't completely accurate about wanting a backstop. The CFO of OpenAI saying they want a government backstop but the question is are they too big to fail? I mean, yeah, that might be the case. Like right now at this point, they've now hitched their wagon to Oracle, to Microsoft, to Google, to AWS. They've hitched their wagon to AMD, to NVIDIA. On the chip side, also Broadcom, or to do custom chips. I mean, they are basically just smattering out, and all these companies are now dependent on them being able to come through, because they're all committing. If you think about, like, they're all committing these huge revenue numbers, and if there's any doubt in the market that exists, that really exists about, is it a bubble? It's really whether or not OpenAI can pay the obligations. I mean, that's the one that's like, where does the cash come from? It was interesting. I actually talked to, this week I was at an event and I talked to a few OpenAI investors that were in OpenAI at varying spaces, but at varying numbers. But one of them was in at over 300 million. I mean, a big fund. Um, and I just said to him, I said, do you think there's any valuation where there won't be money chasing equity in this company? And of course, these people are talking their own book, so it's not like he's going to be like, oh yeah, it's going to collapse at 500. But I mean, the amount of confidence in which these people indicated, the oversubscription level of these kinds of deals is pretty incredible. That there's like so much money chasing in. And what I'm saying is like, the $1 trillion IPO is not crazy at this point. Like $1 trillion IPO for a company, by the way, that doesn't create, as much income as McDonald's. It doesn't create as much it doesn't create as much income as, it doesn't create as much income as you and me in our companies right now. It creates less, just to be clear. But the scale is enormous. So anyways, I think they're addressing the need. The need is capacity, and they want to have as much as possible. And they realize at the end of this game, it's whoever has the most compute wins. But I also think, and I'll leave it at this thought, but I also think it still comes down to OpenAI believing it's going to be a lot more than just models. It's going to be a hyperscaler. They want to be the software company for enterprises of the future. They want to be the device company. They're going to be the search company. They want to be the social media platform. Like, they are believing that they are the super corp of the future. Watch Mr. Robot. They are evil corp. That is the goal. They want to be evil corp. So
I love that. Good breakdown, Daniel. So, hey, we saw two things on the international export for GPUs. Trump basically said, no, we're not selling Blackwell for China. This cut down B20. But Commerce did approve Microsoft UAE deal for 60,000 NVIDIA AI chips. So, Daniel, what's up with the duality here?
Oh man, this is all big theater. I mean, this is all part of the bigger trade negotiation that's going on. I mean, suddenly over the last 2 weeks, President Trump and Xi Jinping are besties. They love each other. They have utmost respect for one another. Trump's reducing tariffs on China. What's next? They're going to start letting them ship the BYDs into the U.S. and we're going to be shipping them first generation Blackwells. And I don't think that's happening. But here's the thing is, I think in the end, this is all a lot of tit for tat, and this is going to end up with something that's going to be just, by the way, the entire Trump trade, people call it the taco trade. I think it's called negotiation. Like, people want to make, like, what do you want him to not chicken out at any level? Do you want him to hold accountable and just blow the economy up? Of course he's not going to do that, but he's pulling those hard levers and he's landing somewhere in the middle. And, I could see the situation where the B30 does land or something else. But, my take is we're going to land where, if you kind of really do the generational thing, right? An H20 versus like a Blackwell Ultra is like 4 generations. It's like, about 4 generations behind, because you had, the first generation Blackwells, you had the H200, H100, H20. So it's like the 4th generation behind. B30 is about half the throughput. It's about half the throughput of Blackwell. It's probably closer to like an H200, in terms of its quality. And so, my read is, like I said, I see a situation where when we get the rare earths deal that we want in place and we feel comfortable, that B30s could be released into the wild. But then the other side of this argument, Pat, is like, does China even want them? Because China's doing such great work. They're building these amazing Huawei chips that are much better than anything the U.S. can build. And then they're training models for $12 using 2 Pentium 2 chips, or what did you call it? 3 Aura rings. And so maybe they don't need our chips anymore. And so that's the other big risk point. But here's what I think. I think Jensen's playing a great game of leadership in terms of what his role is to drive NVIDIA growth. And his goal is to sell every chip he can to every part of the world that he can, within the constraint. I don't think he's trying to do anything that would be, nefarious or where the chips would be used for negative. But like, opening China's market to NVIDIA is good for him, good for investors, period. But I think the U.S. continues to believe that we have a technological lead, that we don't want to give too much too soon to China. And I do believe in what Jensen's saying is China's research arm is incredible, meaning that they have the volume of researchers. And if we give them the blueprints to do this, they will beat us, like they have in EVs, like they have in drones, like they will in humanoids. I do see all those things. So I think we need to keep our and protect our lead here. But I think in the end, we're going to land one or two generations behind where they will be able to get some access to some of these tuned down chips. But I still think there could be more tit for tat negotiations before that happens.
Yeah, it's interesting, Daniel. I'm feeling like this one is a lot more real than anything I've seen before. And I don't know at this point what is part of the negotiation. Like what does Trump want, or what does Commerce or Treasury actually want out of China? There is a massive imbalance in trade, or is slowing them down. Truly the strategy. I mean, make no mistake. I mean, the PLA, the People's Liberation Army, is not going to use an NVIDIA chip in their ecosystem. First of all, there's this so-called backdoor, which I don't believe. And why would they do this? And yeah, you could integrate anything into some missile system or something like that, but you're not going to choose a US-based chip or system to do that. You have to build an entirely brand new stack. And if you're going to do that, you're just going to use Huawei or one of the other XPU companies that are out there. And I do think we should enable the certified CSPs. And what I mean by certified, it's knowing the who, what, when, where. I researched this while I was on the plane for 10 hours coming back from Europe. And, there are people who do KYC down to palm prints on accessing systems in a country that's questionable. Daniel, do you find any irony, or is us allowing shipments to the UAE with Microsoft on Blackwell, is that kind of a second prize in the beauty contest here?
Oh, those beauty contests. So much work, so little return. I think the point is that, we've largely gone to the UAE, including President Trump and the administration, and said, hey, we are in a good place to collaborate, to partner, and to invest in building this out. The trade situation is very different there. Of course, oil would be the most interesting potential trade risk, and they, of course, want to sell oil to us. But I think the China relationship is more complex. China's a real threat to our global economic leadership and domination. The UAE is not. So I think that's a concession. It's something that, of course, allows some of the growth. Because right now, I mean, the one thing that is true, Pat, is like China, we may or may not be able to sell directly into China. We could argue whether anything's getting into China or not right now. But like Jensen and NVIDIA can't really make any more than they're making right now. Like they're shipping everything they can make. So if all of a sudden China did open up, like where the capacity going to come from, and where are they going to, where are they going to reroute capacity from? Like the capacity that's going where? Because if we started using what TSMC, because I'm pretty sure I heard CC Way come out this week and say basically they're going to have record quarters forever, and that basically everybody comes here and only wants one thing, and that's more wafers. So like, even if we open it up, where does more revenue come from? How do they even I don't know, but like at least the checks I'm doing, I don't think we can make more right now without building more fabs, and you can't do that in a week.
Yeah, and at the end, once China burns through all those TSMC wafers that they die banked, Huawei die banked, where are they going to get the HBM? Where are they going to get, or will it be like these LP DDR designs? I mean, by restricting China, what I am with you on is that this BS about them not needing NVIDIA. makes absolutely no sense to me whatsoever. But they do need them big time.
Just the again, just agree the software itself. It's just there's too much work to be done, before CAN or anything else. I mean, like I said, because if software was easy, Trainium would be further along. If software was easy, AMD would be taking more market share or growing faster because just people would be eating it up. But like the software is sticky, and these researchers there are no different than the ones in the US that don't want to use anything else. It's like, necessity is the mother of invention. Like, don't get me wrong, but like, I'm just still not sure that they don't have access. So, and if they're training, by the way, if they don't need, if it's only $4 million worth of training now on a couple of 7th-generation old Opteron servers, then, they could do that in the cloud. Like they could easily do that without actually having to bring hardware into China.
Yeah. Yeah.
So I don't know.
And let's move to our next
Opteron reference, Pat. I just did that for you. Yeah.
No, I appreciate that. You do one every time. Hey, let's move to Google making Ironwood TPU and Axion ARM VMs generally available. So this was announced, I believe, at Google Cloud Next, but these are available, and we did some interviews when we were there. The 6.5 was there to cover it, and some notable things for me that stood out. And by the way, TPUs are very different at this point, right? With all the wins that they're racking up at this point, and all the people who are developing for TPUs aside from Google, I hope this puts the XPU conversation to bed. I mean, I'm still debating people on X, and maybe that's I should just ignore it, who are just saying nobody needs XPUs for about 12 different reasons. And it kind of reminds me of back in the day of these public cloud deniers, right? They're going to give me all the reasons why people aren't going to go to the public cloud, and then you see this monster growth. And there are choices. GPUs are going to be best for flexibility. You'll probably get more, I would say, versions of software out on them. They're easier to redeploy, but if you narrow in and you know what you want to do, they are going to be cheaper and they are going to be more efficient out there. So I think they talked about search, YouTube, Google Workspace inference that's done there. I think there's a scaling path that they put in there as well, kind of hinting at the future. So yeah, I mean, it's real. XPUs are real. You can deny it all you want. Google is absolutely ahead with TPU in terms of at least the forecast that I have seen, and I would say that AWS is second, and Microsoft is still trying to pump out Maya with Cobalt. Final comment that I thought was interesting too is that the head node for this combination is an ARM-based Axion CPU.
Yeah, I mean, this was where it was always going all along. Google opened the door to, we saw Anthropic recently made a massive commitment to build on TPU. We know that all of these clouds are going to go diversified. You and I have kicked this idea around. This is not like a core victory lap, but let's just call it a simple enough victory lap to say, we always said it would be and, not or. It always was and always will be. The biggest cloud companies on the planet are going to build these. And then, of course, if they build them and make the software flexible enough and usable enough, why in the world would they not make capacity available? It's not going to destroy. This is not too many stupid headlines out there that Google's TPU, is going to, be out there to compete with NVIDIA at the high end. It's like, yeah, there might be some competition there, but that's really not the point. It's really not the reason they're building it. They're building it to vertically integrate their business, increase their margins, increase their control in their applications, optimize their workloads. and of course, do it with as much margin, like I said, as possible. And as these things get better, of course, they're going to take their innovations and inward and roll them outward. That's how the cloud has worked quite a bit. In fact, that's how the cloud actually became in existence. Was they built something for themselves and said, "Holy crap, we could rent this to other people."
Yeah.
So I'll leave it at that.
Yeah, it's interesting. We've got Anthropic, we've got OpenAI, we've got Midjourney. So we will see, and I believe Salesforce, Ford Motor Company, and a couple other are using it, which again is fascinating. And then somebody will say, "Well, NVIDIA can't make enough," and I guess my response is TSMC makes all of them, so it's not like NVIDIA couldn't be winner take all with everything, right? And then they can take the wafers and the packaging from everybody else. So yeah, and
Until Intel starts making high volume, and Samsung, right? Didn't Musk say he's going to work with Intel?
Musk says a lot, but he said something kind of like that. But we will see. Maybe he's just negotiating with Samsung. I have no idea, right? Probably. I don't know. We'll see. All right. Hey, let's go into the next topic here, and Dan, this is kind of your favorite new model called Kimi 2 from Moonshot AI over in China. Cranked out a pretty good, really good open source reasoning model, and I hear that they trained it for $4.6 million, which means this capex, the $1 trillion in capex, is pretty much just because we suck at software and China is better at it.
Yeah, China's MacGyver. They're the MacGyver of AI over there. And that's why I said, like, they don't need any NVIDIA chips because they don't need any chips at all. They're going to use, a couple of Mac minis and they're going to run the world with it. Pat, I've said, God, all I can say about this is just total nonsense. There might be something that was trained for 4.6 million. I'm not saying they didn't do something. I'm saying but what I want to understand is just like, does this not feel like DeepSeek V2, 3, 4, 5? Like, there was a lot of stuff done, and then maybe like the test time optimizations that were done that allowed for, inference in the reasoning strand as opposed to inference, all done in having to be developed in the pre-training. But I think what they're doing is taking models that were trained for hundreds of millions of dollars, if not more, and then they're doing like little additional, functions to them to make them work. And I think that is part of the evolution of it. But that initial spend is like kind of being overlooked. I don't understand why this narrative just keeps getting shared. Like, if this was the case, this means that Satya is wrong, Sundar's wrong. It means that Mark is wrong. It means that Jensen's wrong. It means that the entire strategy of our U.S. government is wrong. It means that everything right now that we're doing is wrong. And that there was some little lab over in China that figured out what all these companies and all these researchers could not figure out. And by the way, there's an incentive for Google, Microsoft, Amazon, other, Anthropic, even OpenAI to figure these things out. It's actually to their incentive, because spending all the money they spend with NVIDIA is not to their benefit. They do not make money on that. Like, if OpenAI, Pat, didn't have to spend all this money on infrastructure, they could be a lot more profitable a lot sooner. So, like I said, it's so absurd to me. Like, this isn't like, oh, they figured out how to go from $1 billion a model to 400 million and cut 60%. They're like, I figured out if I swallowed 2 Tylenol that I could turn into the Red Hulk. I mean, that's like what they figured out right here. So only because of my own sardonic nature do I even give it this much oxygen. But this is horsecock.
Oh, I like that. Never heard you say that before.
It's a new one. I'm
coming
out. Horsecock.
Right. This is good.
What do you got? So, what do you got? You believe? Are you a believer?
Maybe. Hey, let's move on to the next.
You don't even have an opinion? You gotta have an opinion here.
No, I mean, listen, this was trained with one Oura ring, and in 12 seconds. And
You're
we're
agreeing
cooked.
with me that this is improbable. Let's just call it like you. This is pretty improbable.
It's one of those things that's such BS, and I just can't believe that CNBC would roll this out. And they did say unnamed sources, but come on, guys. I mean, like seriously, like
Just
show
stop.
us the bill.
Just
Just
don't.
stop. Yeah, I mean, literally, we're going to debate this all next week, Dan. Okay,
Oh man.
can you believe that? I just don't have the energy to
Well,
debate.
I'm gonna be at AMD's Investor Day on Tuesday, and when I'm there, I'm gonna ask Lisa and be like, I heard we don't need any instinct anymore. I heard you could just use Epic. Let's just use Epic.
No, seriously.
God. Okay. Okay. We want
Yeah,
to go
Dan.
to flip, or you
Huh?
want to go to flip?
Yeah, let's go to the flip here.
I think this is a fun one. This is almost as absurd.
No, it is. So shareholders approved an unprecedented plan, potentially worth up to $1 trillion over 10 years, tied to performance milestones. You got market cap, units. I almost said Unix, robotaxi and robots, and retention. And guess what? It got approved, which again I'm seeing on the Twitterverse. So we're going to flip the coin here on: is this fair? Is this good? Or is this bad? Let's flip the coin here.
So you're the for the pay pack. You were the for the pay pack.
Yeah. So bottom line, none of this gets paid without delivering on all the milestones: capex, market share, robots, everything, and robotaxi. Right. So we debated his pay package up to this point, which, by the way, was never approved. A court in Delaware nixed it, and he didn't get all that money for doing obscene valuations here. But it's really that's the first thing. He doesn't get this if he doesn't actually do all the moonshots. Very fair, and I think it's a good package too. It keeps Musk's focus on Tesla across all the different companies like SpaceX, XAI, Neuralink, and X. A lot of people refer to those as distraction. So, and if you look at the $56 billion plan that he hit on, it aligned incentives and coincided with amazing stock price. So this is kind of the sequel to that. I think the pivot, like you look at how difficult this is, the pivot to robotics here is absolutely huge, and that's not only for the bipeds but also for robotaxi. And I think the shareholders chose. I mean, 75% approval said that they, for the most part, agreed. There were some major shareholders that disagreed, but I think that in itself, I mean, we are a democracy. It's pay for performance. I see absolutely no reason why this would be anything but a thumbs up. Daniel, try to argue against this thing. Good luck.
I think that paying any person $1 trillion is just absolutely an absurdity. The pay package itself, Pat, you can have $1 trillion pay package too if you take more insights from your size and you make it 10,000 times larger. Then you can have that as well. This is a gimmick. It doesn't even matter if he ever gets paid or not. It's such an unreasonable, unlikely, and improbable thing that making a package like this is great for headlines. It's great for creating retail sentiment with investors. Maybe gets you a little near-term share price gain, but there's nothing in it that he's going to be able to accomplish. So, China takes the robots, EVs, nobody even wants them anyways. Once the tax credit went away, the unit volumes has sunk. There's other companies doing energy. There's other companies doing robots. There's other companies. So, bottom line is that, $1 trillion pay package as a PR stunt is a lot of fun, but the bottom line is that in your lifetime and in my lifetime, they're not getting anywhere close to these numbers anyway. So I'm also going to announce $1 trillion pay package for myself as CEO of Futurum on Monday, and I'm going to outline the absurd and unrealistic things I'm going to have to do, and then maybe I can get a bunch of people to, like my tweet. So that's all it is. This is a PR stunt. This is silliness. These numbers aren't even real. And anybody can make a nice pay package for themselves when they're willing to be completely unrealistic about what the business is capable of doing. So good luck. This is just a mockery of executive compensation anyway.
So I think that they should give you $1 trillion package.
I think if I hit certain numbers, if I grow the business, by 10,000 times, maybe 100,000 times. But look, I'm actually like yeah, sure, why not? Fine, give it to him. Like if he can hit these numbers, pay the guy. Like, pardon my language. This guy, because I did an assessment last night. I'm like, he's going to take a $1.5 trillion company and make it worth more than Apple and Nvidia combined. If he does that, like, pay the man. Like, I don't know, he's worth 400 billion now. What's the difference of it? Like another 600 billion of net worth at that point? Like, sure. If he, does that and he's willing to basically say, like, I'm going to hold myself to that. Yeah, great, pay him. I'm all for it, man. Live the dream. I do think it is insane times now. Like $1 billion is nothing. Like $1 trillion, 1,000 billion. Jesus.
Yeah, I need a pay package. Need me a pay package like that.
Good gosh. Like I said, but if he does that, because it would be bigger, by the way, he would have to add Meta, Amazon, and Google in market cap. He needs to take it from where he is and add a Meta, an Amazon, and a Google in market cap.
Crazy.
I'm just saying, like, if he does that, pay the guy. Like, heck, if you and I did that much, I think we'd both want to be paid well. I don't know. I have no issue with it, but I do think it's a bit of a PR thing. Like, because I would guess that if Satya or if Jensen grows because essentially this would be if like Jensen grows Nvidia to 20 plus trillion market cap, how much would he make? Because it's like the same thing. You know what I mean? Like, it's kind of one of those things that's like, all the guy's basically saying is, I'm a moonshot. I can do something massive. And if I do, I want to be paid extremely well if I accomplish this. But
seems fair to me.
Anyway, I don't know. This Sunday, I don't even know if I have enough energy to fight this level of kind of silliness.
Absurdity.
I'm gonna let it go. You want to? I don't know. What do you want to do next? What do you want to do next?
Yeah, so let's do bulls and bears. We definitely had a market meltdown and a bunch of earnings, but let's dive in, Daniel. All right. Yes. Market pooped the bed. Daniel, we're definitely in a bubble that just had a micro tear in there. And yeah, worst week since April for tech and NASDAQ. Valuation resets. Are we doomed? When I started putting money in on Monday market open, I actually caused this, Daniel.
I think you did. I feel like, because there was because didn't it go up like for a day and then it went like hard down though? Like the first day you were in, you're like, oh, this is good. I like this. This works. And then
no, it didn't even do that because I bought it market open.
Okay. I thought Tuesday was like Scare-mageddon was on Tuesday was when it really kind of had that hard fall. And then on Wednesday, everything came back hard. And then Thursday, it sold hard. Friday, it sold hard. And then, but actually by the end of Friday, it was up. It was up. Pat, I actually attribute most of this to government shutdown. I think right now what we're getting is, there's a little uncertainty. Consumers are going to start to get hit. We have a massive federal government. People are going to start to get nervous about spending money. We have a limited data because the government being shut down. So we can't actually see everything that's going on in terms of employment, in terms of inflation. And I think that it's a good excuse right now with this uncertainty for a little bit of selling. I still think it's going to rip higher, but I think we could see a lot of kind of volatility and turbulence until the government reopens. Pat, we're at one of the longest shutdowns ever right now, and it does not feel like there is a lot of desire on either side of the aisle. We had some big Democratic wins in some races this week. I think that through some more cold water on the idea that maybe this current administration and its very, very business friendly policies are going to sustain, that we maybe see a little bit of a pendulum swing coming back at the midterm. And right now, it seems that the Democrats are willing to dig in and basically wait. And I mean, even if people's SNAP benefits aren't getting paid right now, but when all of a sudden Thanksgiving comes, Pat, and people's travel. I mean, if the ATC is smart, they'll walk out in Thanksgiving week. They'll just that'll end this thing. Unfortunately, it'll ruin some of our lives in terms of our travel and destination. But when you start to really punish the average consumer, and then that starts to get associated with a different party. But then again, both parties are doing a pretty good job of blaming the other for all of this. So it's like not even really evident to me who is at fault. But I'll say one thing before we actually talk about the earnings, Pat, is tech earnings have been good. There's not been, I can't really think of a company that hasn't had good earnings yet. And not just the earnings, the guidance. So what I'm saying is, like, are valuations stretched? Yeah, you could argue that some valuations are stretched. Has there been an incredible face melting rally upwards that you decided to get in on at the very, very tail after like 300% runs for a lot of names? I mean, that part is real. And so, like, I was laughing, like, let's not even talk about just pure tech. We'll talk about like kind of speculative names like Robinhood. It was up 300%. So it goes down by 10 or 15%. Now it's up 260% for the year, and everyone's like crying. Or you look at a Broadcom. I mean, it was getting close to $400. But I remember we were looking at this thing, was 250 like 4 months ago. It was like under 200 in April. Like, companies like this don't double in a year. Like, that's not normal. So so going back to the whole, I actually think this is very real. I think the forecasts are very real. You look at things like memory, storage controllers. You look at energy turbines, thermals, all the things that are indicative of how long this builds out. And I think I shared something yesterday. I'll give credit where it's due. I saw it on Ben Baharin's Twitter, but it was about like a Microsoft exec that was basically talking about like seeing literally no slowdown in build out of data centers before 2025 and 30. So that basically means if this was the internet bubble, if you want to use that analogy, we're in 1996 right now. We're not in, we're in 97. We're not in 2000 or 2001. We are literally not even close to the part where we start to feel like demand and supply are out of whack. We are still building. And the earnings to me are indicative that it is. My biggest worry, though, is, like I said, shutdown. So I know I went on a little long here. Pat, is consumers start to get hurt at some point. Like, where when jobs aren't strong, when the economy's not strong, when you have 10+% of your workforce is the federal government, those people aren't getting paid. Like, at some point the consumer gets hurt, and whenever that happens, you're going to see the market react.
Yeah, well, let's dive into those amazing earnings. ARM had an incredible print, right? They had a triple beat, revenue, EPS, Q3 guide, and most part got upward revisions. And their story is very straightforward and continues. Not only are they getting into new markets, but the markets they're in, they're growing share, and they're adding even more value with programs and products like CSS. And this was one of the first ones, Daniel, where it seemed perfect, and then the stock like dumped. And I believe it was a positive reaction. It was hard to separate the the doomers out there for the week and how they performed, but the upward revisions from all these, Evercore, KeyBank, TD Cowen, Mizu, JPM, UBS, all increased price expectations on there. So it's a great story. And oh, by the way, we haven't even seen details on ASICs, chipsets, or SoCs that we keep hearing hints of. I think a great case study here is Google. Not only overall hyperscaler data share is around 50% on the CPU side, but Google, 30,000 internal apps have been migrated to ARM, Axion, 22 million developers out there on ARM. They're gaining share. Every time Apple gains share, they gain share in PCs, regardless of how ARM-based AI PCs are going. And yeah, there were questions. I mean, of course, it's not just a love fest here, right? There were questions and concerns around ARM's China exposure, licensing pipeline, deal cycle timing. But I feel like those are just noise. There was nothing new for anything, and the scrutiny over SoftBank related revenue and its impact on the overall results. I look at that as reaching for finding some challenge, and financial analysts, it's the reason they get paid. But solid earnings.
Yeah, I mean, I don't know if you had the chance to speak to Renee. Usually we both do.
Yes.
This one was just good. I mean, the thing I love too is there's a story still evolving, the expansion, but like the CSS expansion, margin expansion, record royalties, strength in terms of each of the cloud providers growing. What I love about it is it's not so much it was always more of a handset and low power story, and it's really finding its way more and more into data center. We talked about Axiom earlier. Of course, the Graviton business is growing very, very well. And there's an AI play here. There's an AI play that's coming, and I just don't underestimate. I think ARM has a role to play, and I think this will be a bit thematic again because people are going to be like, "Oh, it's ARM's going to compete with NVIDIA." It's like, oh, stop it. We'll have that talk, I'm sure, when we hit Qualcomm too. Same thing, but great result for ARM. Another indicator again, looking for the weakness in the earnings, and this wasn't it.
Yep. So let's dive into AMD. Basically a triple beat, Daniel.
Yeah, same thing. I mean, data center up, 22%, strong number there. Client and PC up even better. Epic, very, very strong. The nit on this one, and I said this in public, it got picked up a lot, was the 22% data center growth. We know Epic is crushing it. We know AMD is doing amazingly well with Epic. I think there's a lot of worries about what that meant year over year on instant growth. And I think that's probably after the company had this massive melt up. I mean, it just absolutely, I don't know off the top of my head, but it was up like about 50%. I mean, it's some huge number. It was up after the OpenAI deal, after the Oracle announcements. I mean, AMD has just been on absolute fire. But I think people are just overestimating how fast that sort of transition. I think AMD's big AI GPU inflection is rack scale. I think it has to be this MI450. I think that's where we're going to really get a sense of how powerful and how successful and how competitive AMD's portfolio is. But I think that also was the number everyone had eyes on. So in terms of performance against expectations, the street, I think AMD did great, continues to do so. I think where you're going to get the nit is that people want these huge growths in MI. They want huge growth in the data center GPU side. And we're just not getting enough clarity there to be 100% certain where it stands. But I think that's actually going to come more next year. That's where I sit on that one.
Yeah, I mean, 100%. I mean, people were expecting an MI 450 parabolic takeoff here, and it's the second half of 2025. We're literally 9 months to a year away from this acceleration. And the one thing that just people don't understand is AMD currently does not have a rack scale solution where you can address more than 8 GPUs. Blackwell, you can address 177, moving to 144 coming up here. And what that does is that gives you essentially workloads, particularly training workloads, slow down because you have to go across a network to string all these things together. So
you said 177 going to 144. Did you mean 72 heading to 144?
Yeah, sorry about that.
No, I just want to make sure, just because you're starting to question my own. Okay, just
I am jet lagged and I'm definitely not on this morning. So
you're doing
thank
okay.
you.
I'd give you like a D minus.
Yeah, no, I appreciate that. It's better than an F. Now, let me go hang myself right now. I did want to give the client folks over at AMD some credit. I mean, 73% improvement here. So they've kind of lumped client and gaming together. And I think that's to potentially not shield, but the gaming number is a lot smaller. They do bring it out. I mean, gaming did almost triple year over year. The consoles have finally kicked in here. So yeah, you have to give credit, but that's just not what the street is looking for. It's not what the street cares about because it's not a direct comparison. And when Nvidia is given a $500 billion 5 to 6 quarter read, I mean, if you're not putting up, $100 billion forecasts or floating at everybody, people will not be happy. Let's move on to Qualcomm. I mean, oh my gosh. I mean, I'm going to call this a quadruple beat, right? Revenue, EPS, QCT handsets, and Q1 guide got mostly upward revisions. It's funny. Stacy Raskin calls Qualcomm the company, the Rodney Dangerfield company, the company that get no respect, and they're starting to get some respect as well. There are some things that are weighing on it, right? China losing Apple, although Qualcomm can't be clearer on Apple and what that means. In fact, they have a slide that shows non-Apple, like literally the word Apple on a slide. I think that investors also got a little bit spooked of, even though Qualcomm said, hey, we're going to hit 75% premium share for Samsung versus 100. They even questioned, well, what do you mean 75? Why is it not 65? Why is it not 55? So it's just weird. At the same time, auto over $1 billion, this notion of data center and the numbers behind that. I think the company, once they start to give more details, I would say technical details on their data center products, I think that the market and the street will actually, the gear will lock in. The other thing that the company did is they essentially said, hey, here's what we told you at Investor Day, and here's how we did. And we're ahead of everything we told you at an Investor Day. And I thought that was, again, very high degree of disclosures out there. I think the two that are going to get people very excited is where the market is rocking, which is data center. And I think the next one, and I think you agree with me, will be robotics.
Yeah, I think you hit the current well. I mean, they did have that little tax adjustment. They did the same thing Meta did, locked in long-term lower tax rates, good for cash flow, non-cash item on this quarter. The AI play, the silliness is everybody's saying, oh, they're trying to compare it to like Blackwell Ultra. It's like, I think, this is a next gen Grok play. Like, let's go build high volume inference, LPDDR memory. They're doing their own little techniques and strategy. It's inference centric. It'll probably be super successful in the Middle East. It'll probably, some neo cloud scale, and then of course, enterprise cloud scale opportunities. And I keep saying like 1 or 2% is a $5 or $10 billion swing in their incremental business. So really, really meaningful. I think they've got all the right components. Been saying my kind of long-term bull thesis on Qualcomm is they've got all the components to play a role in lower end humanoid robotics and do that well. And then, I mean, my overall read is just this company has executed pretty well against its multi-year Apple fade. The Apple fade, and what are they going to do, and how do they diversify out, and that pivot away from being a handset company. I mean, they have the handset business, but that's, they want to be valued differently. And part of why they're so interesting is they're valued so, frankly, they're just valued so low. They're valued like worse than a PC company, like a pure PC company. I mean, 13, 14, 15 forward, I think that's a third of what AMD is, and that varies at time to time. But like, if they can get some credit for some of these adjacencies, they have a lot of upside. If you're an investor, something to keep an eye on. But they have to execute. That's the thing I'll say is they have to execute. They got that first deal in AI cloud with their AI 200 series. I think one or two more announcements will go a really long way to proving that they can win meaningful business in this space. And I expect they will.
Yeah, good print there, Qualcomm. Hey, let's go into Coherent. Daniel, I think you and I got briefed on that at the same time. I was barely awake.
Laser beams. Yeah, I mean, there's a lot going on there, but this is a really another interesting. I call these like the breadcrumbs companies, the ones that like you look at their business and their outlooks, and because you basically have data centers connecting to other data centers. You've got copper, but of course then you got light, you got co-packaged optics. You've got a company like Coherent that's building a lot of the transceivers that allow this data to move, scale out, scale across, and what I'm hearing and what we're hearing is basically the insatiable demand. This is a company that does other things too, like thermal, a lot of material science that they do. And so when you look at things like copper plates and GPUs and cooling, that they're building new next generation technologies that should help. But long story short is they're increasing margin, they're increasing their earnings, they're increasing revenue substantially, and they're basically sold out. And what I think you and I both have agreed in the past that we really like about it is besides the really strong demand, this is also a company that has built a very resilient supply chain with minimal dependence on China, was able to get out of that sort of issue early on in this trade, in the trade conflict. And so their capacity and their ability to scale is really more in their own destiny with less risk related to outside forces. So I think this is one of those companies you got to kind of watch, Pat, and this demand, especially around these transceivers to move data across data centers and within data centers, is going to be a massive boondoggle for a long period of time. And they're supplying, and they supply to a lot of the companies that we've talked about on the show. So that's the thing is like they don't say who they supply to, but if you start to insinuate these big name companies that are building these big rack scale data centers and connecting these data centers, this is the clients of Coherent. So you have to like this as a play upstream if you believe in this data center build out and this continued growth and need to move data faster from compute-tel to compute-tel.
Yeah, I mean this company does a lot of different things down to being in the OLED and LED display business where it uses its lasers to cut and make the proper sized display for different devices. But 69% of the business is data center and comms, and that's where it's rocking. So as goes hyperscaler CapEx, goes Coherent, and that is up, right? You pretty much had everybody from Rosenblatt, Barclays, Benchmark, Stifel, Needham, Morgan Stanley, who all raised their price targets. The only downgrade was Northland, who downgraded it to market perform, which just is insane to me. A stock that's 159, they're going to put it 125 with all this gigantic growth, right? And they're doing the 800 gig to 1.6 tera ramps. They've already sampled the CPO scaredy cats, CPO, NPO lasers are sampling. Margins should raise, but they're going to have to get capacity. And they're nice people, and I think Jim in particular is not going to come right out and say we are the biggest manufacturer in the United States, and others do it in China. But I wish he would, but he doesn't, and that's okay. But if the shit hits the fan and we're cutting off people, they're going to go just up, up, and up. But then again, on the other side of my mouth, can they hit that capacity with the manufacturing that they've stood up here? So hey, Daniel, one more to go. We're almost there, bestie. Is Lattice? After hours for the company was pretty tough, but it's a tough market, and they're cranking where you would expect them to crank, which is in the data center and networking. I wish they didn't call it comms and compute. It's really data center networking and compute, and that is absolutely rocking. Their servers up 85%, and networking is up 63%. It's just this industrial and automotive business is just in an absolute funk. And I mean, the entire industry, I'm waiting for somebody to say, well, a lot of people have said we've reached bottom, right? Like Texas Instruments on semiconductor. And then it's like they lay an egg in those markets. So it's like, at what point do we actually believe that we've hit a bottom? I mean, there were quarterly growth numbers. Lattice, moved up quarterly growth, and that's a good sign. But still, the discussion of bleeding off inventory. When does the bleeding off inventory stop? Lattice did say, "Hey, we are under supplying to demand." Okay, and that's code for we're still burning off. They had some raises. Stifel, Raymond James, Benchmark, Rosenblatt, Baird, all moved up their price target. So, here we go, Daniel. Great earnings, but not necessarily a completely positive reception out there in the marketplace. It's AI doom all over the place.
Yeah, so I'll add just one thing on this one, and then I've got one other name I just want to say a really quick remark about before we close out today. But the data center business is great. I mean, this is another company that's just making that pivot. It had some legacy parts of its business, consumer and stuff, that have been dragging it. It's been a longer term, but Pat, 85% growth in server. 60% up in their data center business. This is one a little bit like that process that Marvell had to go through at one time to sort of pivot its business. I think, they're there. And the demand for FPGA is very strong. And so this is a good one. But like I said, this is going to be data center revenue and server revenue that's going to offset consumer and some client type revenues that are going to continue to drag a bit. They're just not going to have the same kind of growth. And by the way, AI, and some of the things that like surface compute can do inherently within Copilot might take out some of the need for certain FPGAs. So they're going to get the growth, but it's going to come on that in the industrial and server side. I did just want to give a shout out before we close out the show to our friend Niccolo Demasi. He had IonQ at earnings this week. He's quantum is controversial, and a lot of people have a lot of questions about what it's going to be and what it's going to become. But you can't argue with revenue. I mean, the company did, hit 40 million this quarter against a 27 million target. So it had a big beat, came in a narrower loss than expected on adjusted. And also this has been a lot of the culmination of all these acquisitions. The buying spree raised multiple billions of dollars. They basically have enough cash on the balance sheet now to run this thing till the end of the decade without raising more money. So very smart, wow. Admire the work that's been done there. And by the way, there's this gap loss that a lot of the sort of, the bears, the quantum never will be anything bears. And, I spent time with IBM last couple of weeks at their quantum event and others. Like, I don't believe this is nothing. I believe this is an industry that's got some real legs in different areas. But the most interesting thing is all that loss that everyone's throwing around there, it all had to relate to warrants that were issued in relation to a run. It's a non-cash item. So usually gap is like, oh, that's cash, but it's actually a non-cash item. They actually did really, really well. But I just thought they had a huge raise on their annual revenue guide, and they're going to be over 100 million in revenue next year. Now, I know for a company that's worth 20 billion, people might throw that out and say that's too high. And that's a debate for the market, and the market is efficient and will find its own path. But of all these other quantum names, other than IBM, who said they have $1 billion of revenue attached to it over its existence, 100 million in a year, they're showing some great trajectory. So I just felt, in the spirit that was worth getting a call out. Pretty good performance there as well.
Appreciate that, Daniel. So hey, we made it. Sorry I couldn't make it earlier in the week. I was literally on an airplane coming back, and I will be completely recovered when this is airing. But I'm a little jet laggy right now. I gotta tell you, my brain and my mouth is not working at full capacity here. But hey, appreciate all of you showing up. We do appreciate you. Hit that subscribe button, and hope you have an amazing week. Take care.